I'm joined by global macro strategist Neil Mackinnon from VTB Capital. Thanks very much for coming in to speak to us, Neil. So what are the big challenges facing Bernanke in this speech?
I think the big challenge is the US economy itself. In Mr. Bernanke's congressional testimony mid-July, he did warn Congress that the prospects for the economy were unusually uncertain, as he termed it. With just over a month from the congressional testimony, it looks actually more certain that the US economy is moving closer to recession. And obviously the GDP revisions today will be closely watched in that regard, but certainly a variety of economic indicators over the past month or so have deteriorated. Record lows in new home sales, initial claims on the 4-week moving average back to its highest level since November last year. So the housing market, the labour market is under pressure. And I think that obviously there's a big focus on what the Fed might do next. Will they move from QE light to QE2, more quantitative
I wanted to ask
easing?
you, how difficult is it going to be for Bernanke to convince the markets that the Fed still has ammunition?
Well, I think that's a good question, and it is a serious matter of debate because we know that there's been press reports of dissent within the Federal Reserve, and that was just about how do they sort of manage the sort of existing level of the balance sheet, of the Fed's balance sheet. And but I think if the unemployment rate starts to go up, and next week's jobs report might well highlight that, and should equity markets slump, then it might actually pull the dissenters into line. And I think the end game on all of this is that Mr. Bernanke, who's written the textbook on the threat of Japanese-style deflation, won't stand around. So I think ultimately we will see.
How serious a risk is that at the moment?
Well, I think deflation is a risk. I mean, the core CPI inflation numbers are below 1%.
Bernanke said that in his testimony, didn't he?
Yeah.
That underlying inflation
the
was
numbers
trending
speak
lower.
for themselves, and the Fed's own measure of inflation expectations has been dropping, all year. Inflation is not yet the problem. It might be at some future date, but it's deflation is the here and now. So I think that we will see an expansion of the Fed's balance sheet before too long, sooner rather than later. We could see other measures like cutting the interest rate paid on excess reserves as a way of trying to recycle all this liquidity into the real economy. But confidence is very low, and this is the issue.
And when you speak about the prospect of further stimulus, of course, as you say, there have been divisions among Fed policymakers about the wisdom, the merits of the Fed's bond buying plan. To what extent does that complicate the push for a further easing of monetary policy?
Well, I'm not sure it necessarily complicates things. I mean, I think that monetary policy has to do the heavy lifting, because we know that the fiscal stimulus measures peaked in the second quarter. They're probably approximately neutral third quarter, but here on in, they will act as a drag on growth, particularly given the cuts in state spending. So it really is up to monetary policy to try and get the US economy out of a potential deflationary hole.
And will further stimulus work?
That's the big question, and I think market economists are worried about that, and academic economists are worried that perhaps there's less bang per buck, so to speak.
Could it undermine confidence in the dollar, for example?
Well, it's possible at some stage. I mean, I'm not sure what the currency effects might be, but there is a serious debate whether pushing on a string, more of the same, throwing more debt at the problem. I mean, clearly the Fed wants to flatten the yield curve, but I think trying to get the money out into the real economy, encourage confidence, encourage business sector to lend again, and sitting on a big cash pile are key issues.
Neil Mackinnon, global macro strategist at VTB Capital. Thanks very much for your analysis.